Welcome to this week's Nebraska Soybean Board Weekly Market Roundup, which is brought to you by Nebraska soybean farmers and their checkoff. I'm Bryce filling in this week for Susan Littlefield as we look back at the past week. Wheat and soybean futures, in particular today, suffer some heavy losses as we close out the week, and we'll be breaking down all the activity impacted the grain market coming up right after we hear this message.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back to the weekly market roundup. Today we are joined by Jim McCormick and Brian Splitt, both of agmarket.net. Gentlemen, we appreciate your time. We look back at what happened in this week's trade. Corn and soybeans and wheat all traded down for the week. Soybeans seeing the largest drop, 35.5 cents for the November contract. Corn futures, more modest decline, while wheat futures also heavily under pressure. We'll get into some of the reasons why, but either one of you want to open it up and tell us kind of how you saw the trade this past week.
Yeah, I'll start. Essentially, we've got a period right now where the market has definitely been under pressure. We had the WASDE report, and it just didn't give us any information for the October WASDE to really continue the idea of moving things higher as far as price goes. The yield was moved higher on corn, a little bit counter to what the trade was thinking about. And up to that point, we were holding what would be the uptrend on the corn chart from the August lows. So coming out of the weekend, we took that out. The soybean market was already under pressure. We had already taken out its respective uptrend from the August lows. And that was done earlier in the month, essentially as the South American weather forecast started to show higher confidence that this rain event was going to come and allow them to plan at a more normal time frame. So I would say that the bean market, as far as this corrective break here, was a little bit ahead of corn, and corn's definitely caught up this week. We also saw wheat come off the highs quite a bit. The wheat market had gone up recently and hit some major resistance around the 200-day moving average for Chicago SRW. That was a little bit above $6 a bushel. We've then since fell back below $6. That has become resistance. And today, this morning, we were right up against $6 early in the day. We ended up finishing near the lows below yesterday's lows. So it was a big outside day lower in wheat. And it looks like the momentum right now for the majority of the grain contracts is pointing down.
Appreciate your thoughts on that, Brian. I guess, Jim, is one of the things that's fascinating to do is looking back on previous years of how we set things up. And in particular, going into this weekend, there's some things as you guys are looking back at last year that are aligning pretty close. Do you want to shed a light on that?
Yeah, sure. I mean, the first one just to look at is the spreads. We saw a lot of bull spreading going on today. And what I mean by that, Bryce, is you saw the December corn gain above quicker than the March corn as this market bounced or even went down per se. And the same thing happened in the beans. We did that again last year. I'll let Brian go into a little bit more detail about what happened there. But corn, actually, overall, what we saw the same type of situation. We had kind of a rally from the mid part of September to the third week of October. And then coming out of this weekend in the third week of October, the market pretty much sold off on the December corn all the way into first notice day and eventually taking out what a lot of people are calling the fall low by 20 cents. So, precedence is right now is I think with a big crop coming online, a lot of harvest still yet to go. A lot of elevators are full from across the country. We think the odds are higher that you're going to kind of see that same pattern. Now, beans did the same pattern a little bit later. Their rally started a little bit later. They topped out more in the December timeframe, but eventually it's the same situation, Bryce. Eventually, as the market got convinced that the Brazilian crop was there, the market sold off and eventually took out what was a fall low by 60 cents. The bean market right now, harvest is getting wrapped up here. The transition to what's going on in Brazil is becoming the trade's forefront. And what's key there is we've been very hot and dry in August and September. The rainy season has begun right on time here in mid-October. And if that rainy season continues as normal, the crop gets planted, the trade's going to get more and more comfortable with the size of the Brazilian crop. And if they have anywhere close to trendline yields price, what's going to happen is it'll put world ending stocks at all-time highs. It'll put world stocks use at second highest level ever. And that essentially, in my opinion, is closer to $9 beans than $10 beans.
Brian, I'll let you pick up there. Anything else on the spreads front you want to mention?
Yeah, so what Jim was alluding to was the movement in the spreads we've seen, and part of it was this week. We actually saw the spreads bottom a couple weeks ago for where they made their lows, and it was again very similar to last year. So, for example, your December to March spread. This is December corn to March corn. That has narrowed in from almost 20 cents to about 14 cents. And what those spreads ended up doing last year was they rallied into this particular weekend a little bit tighter than where we were this year. It got to about minus 10 3/4. But eventually what happened is that spread then built carry from this weekend moving forward. And it did that all the way into the delivery of the December contract. And the maximum carry that we saw from Dece to March was 27 1/4 cents. So this is important for producers from a couple different aspects. But if you have bushels that were delivered on basis, and you know that you are not pricing it off of December, you have to watch these spreads, because if you wait until the last second and roll it from Dece to March like last year at 27 cents, well, that is taking your basis. So let's say you're 10 under, right, December, and I'm just using that as an example. If you roll from Dece to March at 27 cents, now you're 37 under the March, okay? So that spread is a very important component of that roll conversation. Now, also, if the grain is in your bin and you're hedged, and this carry widens out, well, that's a great time to move your hedge from December out to March if that spread widens out to 27. Okay. Now on the beans, it's a very similar story. We saw November rally against January to a high today where there was only 7 cents of carry between November and January. That was just at 20 cents 10 days ago. So again, last year it rallied into about minus 15. It was stronger this year than last year. But again, once we got through this weekend, the spreads rolled over. We eventually built 25 cents of carry between November and January. So similarly, if you're a soybean producer that has delivered beans on basis and you do not want to price them off of November, you have to be thinking about rolling it to Jan. And the tighter the spread, the better. So your risk right now is that spread widens back out as we go into delivery of November beans. We're back to 20 to 25 cents of carry.
This is the weekly market roundup brought to you by Nebraska soybean farmers and their checkoff. If you're just joining us, Jim McCormick and Brian Splitt, our guests, both from agmarket.net. And Jim, I want to come back to you and talk a little bit deeper about what you were alluding to about this picture, maybe some of these assumptions that are coming to fruition. If there's a good crop in South America going into this year, a very large crop across the world, and you mentioned a soybean price might have you double down on what you were speaking to on that front.
Well, plain and simple, Bryce. I mean, like I said, U.S. carryout right now is about 550 million. And part of the reason why it's only 550 million, the government's assuming we're going to export an additional 150 million bushels year on year compared to last year. Okay. And we don't believe that's going to happen. If the trade gets convinced, and the Chinese are convinced, I believe, that the Brazilian crop is going to be there, in essence, trendline yield, what will happen is that will push the world carryout to all-time highs, as in ending stocks left over. We'll never have this big of a bean pile in the world than we ever have in our history. The stocks use, another way to look at it, will be at the second highest level. So when we've had stocks use at these levels before, we had beans trading with a 9 and even in the 8s in front of it. So the risk is there. And I think it really gets important, because if the Chinese, I think, are convinced that the Brazilian crops are there, I think there's no way they're going to buy those additional 150 million bushels gain year on year. They may actually cancel some of the purchases they already did. That'll balloon our carry out from 550 to 600, 650 plus. And the reality is that's not $10 beans historically. That's closer to 9. And that has an impact on corn, because if you look what corn does, if beans go to 9, corn won't be trading at 4. Corn will probably work its way closer down to 350 as it keeps in with the ratios.
Ryan, back to you before we wrap things up. I want to get a couple words in on the wheat front. Seems like another market heavily under pressure. What are some of the factors for that?
Right. So we saw a really good rally off of the lows, much like we saw in corn and soybeans. And a lot of that was due to concerns about Russia production, dryness there. We've also seen a shift in Russian weather, where there's been some addition of some rain in their forecast in some of their larger and growing regions. And we saw that earlier this week. That helped bring wheat below its uptrend that has been in place. But we also do typically get these seasonal rallies into this fall time frame. We make our harvest low during summer. We do typically go up into fall as we're going into when we would be drilling our winter wheat, trying to get some additional acres bought there. It's very tough to think that we were going to see aggressive acres at prices we were trading at 2 months ago. So the market had a job to do, and it did incentivize some of those acres to get planted. I think producers with wheat, near 650 for Chicago SRW were willing to get that wheat drilled and able to hedge that at a profitable level. So now if we start to see the Russian weather become less of a story, a lot of times the market overdoes how much they trim production based on some weather events. So if it's not as bad as we think, now that we've got some wheat drilled and the prices were high enough to do that, we're likely to see that soften up again. There was also an exclusive deal here where it seems like Russia is going to deal exclusively with some of the world buyers and really try to cut us out. And so that seemed to have an impact tremendously, where initially the market kind of thought of that as a bullish impact, and the market tried to rally and then realized it wanted to go the opposite direction. So wheat looks also poised for a potential retest of lows that were made in the month of August if we don't have another bullish story to kind of reignite some of the short covering. And right now the short in wheat is pretty small, so the funds could very well come right back into that market and build a short position again.
That's Brian Splitt. Jim McCormick, also our guest today, agmarket.net. Gentlemen, thank you very much for the time, and thank you for joining us here on the Weekly Market Roundup.
Hey, thanks for having us, Bryce.
Thanks, Bryce.
As a reminder, this program is brought to you by Nebraska soybean farmers and their checkoff. I'm Bryce Duskett here on the Rural Radio Network.